Good morning and a happy Thursday, everyone. Welcome to today's episode of Morning Wealth. Three things that we will talk about: Powell's message, earnings roundup, US GDP and jobless data coming out later today, and what to expect from there. Wall Street's main indexes closed higher on Wednesday, boosted by tech shares and after the Federal Reserve kept interest rates unchanged as widely expected. The FOMC said economic activity and labor markets have picked up somewhat in the recent months but remain well below their levels at the beginning of the year. On the corporate side, CEOs of big tech testified before the House Antitrust Subcommittee following a probe into the anti-competitive practices. In fact, I think the probe is still going on. The Dow Jones added 0.6%, the S&P 500 was up 1.3%, and the Nasdaq was up 1.4%. Treasuries were little changed though. The 10-year yields were just under 0.57. The greenback dropped against the G10 basket. Gold advanced and Asian equity futures are in the green. Oil was propped by the biggest decline in US crude stockpiles this year. So nationwide inventory stumbled more than 10 million barrels last week is what the EIA has said. Oil imports dropped with shipments from Saudi Arabia falling to the lowest since April. Jerome Powell kept his message as dovish as possible. The Fed left rates near zero, and its chief made it clear that they're going to stay that way, saying signs of a coronavirus resurgence are starting to weigh on the activity. He urged Congress to boost fiscal spending to offset the biggest shock to the US economy in living memory and decried rising inequality. The official statement noted that the growth and employment have picked up after sharp declines but remain well below where they were at the start of the year. Moving on to earnings, again a lot of earnings to digest. Qualcomm gave strong sales forecast for the current quarter, announced a new licensing deal with Huawei. Revenue will be as much as 6.3 billion in the period, while consensus was for 5.77. Shares were up 12% after market close. PayPal saw spending on its platform surge, the total payment volume jumping 30% to 222 billion in the second quarter, topping a 208 billion estimate. Shares were up about 5.63% after close. Boeing's operating cash burn was about 5.3 billion. Revenues missed, and the company said they will cut the 787 production to 6 per month in 2021. Shares were down almost 2.83%. GE sees a return to positive industrial free cash flow in 2021. Revenue beat while its adjusted loss per share was wider than expected. Shares fell about 4%. General Motors' loss per share was narrower than expected. It was down about 1.6%. Up next, we'll be looking for Samsung's report. So Samsung's memory chip production may offset a tough quarter for smartphone shipments, is what the analysts are observing at Bloomberg. Consensus is for a 9.15 trillion won, which is a 7.67 billion in operating profit. Eli Lilly sees a flat prescription volume for most of its drugs. Investors will also be eager to hear more on the company's COVID-19 treatment trials. MasterCard is also looking to report. MasterCard has room to beat both on revenue and EPS according to Bloomberg Intelligence. An estimate of 15% decline in total payments volume may be overstated is what the expectation is. The US GDP report is going to be historically bad. The only question is how historic. The economy probably contracted a stunning 34.5% in the second quarter according to consensus after the previous period's 5% slide. Personal consumption is also seen plummeting 34.5%. Meanwhile, today's Thursday and we'll have the jobless claims data. The labor market remains grim. Another 1.44 million Americans may have applied for unemployment claims up from the previous prior week's 1.44. Remember, that was a reversal in the trend of a higher number compared to what we saw in the previous many weeks. With the continuing claims also likely to hover around 16.3 million. US dollar fell. The US dollar fell to a 2-year low on Wednesday after the Federal Reserve left interest rates unchanged at near zero. Expectations that the Fed will let inflation run higher than previously expected before raising interest rate has helped send real yields to near historic lows, and is also raising some fears that the dollar's role as a reserve currency could shrink. So the real 10-year Treasury yield, which reflects returns after the expected inflation is taken into consideration, has fallen to a record negative 0.93%, and all of that is weighing on the dollar. So that's the update. Stay safe and healthy, everyone, and I'll speak to you tomorrow.